Everybody. Crypto Outlook is a very large format, so we're going to start out by putting a little more specificity about what we're talking about. We have three very different people, if I include myself here, to talk about it. So first, why don't we do a little bit of introduction? I see some leaning in. Maybe we could each take a minute or two to describe who are you? How did you come here? First, generally speak about crypto, and then specifically speak about you, and your association with it. Maybe we'll start. Why don't we start with Maggie? Hi.
Sure. Hi. Thank you, David. Hi, everybody. Nice to meet you all. I'm Maggie Fong. I am the CEO and founder of Metalantis.com. That is Meta Atlantis. As Marty suggested earlier on, we are specialized in metaverse. Actually, we are right now focused more on NFTs. Our next phase is to take our clients into the metaverse journey. Metalantis is a sports-focused NFT platform and metaverse experience builder, and I would love to speak for the next couple of minutes about what our view is on NFTs, metaverse, and why sports is a unique industry for its usage.
Okay, could you now just share a little bit about your background, because you come from a very solid, investment history and Wall Street history.
Thank you. Yeah. So I always start by saying I was born and raised in Beijing, China. That shaped kind of half of me. Oh, thank you.
That's the camera.
I was just looking at David, lovely face. So I came to the United States when I was 18, and I studied computer science right here, UT Austin, Longhorn. Really? Woohoo! So loved my school. I was a total nerd. I am today. Loved computer science, but accidentally ended on Wall Street, and actually above all things on institutional equity derivatives desks. Worked on Wall Street, including Goldman Sachs and Morgan Stanley, for almost 7 years. Learned a lot, especially during the financial crisis. And in 2009, I started my own cross-border transaction advisory company called MF Advisory. My client at the time was family offices like you all in Europe, and also some PE fund, VC fund in China, in the US, mainly who are aiming at cross-border asset acquisition. So, we did multiple different industry deals like in oil, in environmental decontamination, in technology, of course, in commercial real estate. But 4 years later, I realized my passion, my personal drive is still in tech. And so January 2014, I launched my own PE fund called Winston Capital Technology Fund. We were based in New York City at the time. I ran that fund for 8 years. We invested in Alibaba early on, invested in Uber, Lyft, Dropbox, and also WeWork. My fund lawyer always told me never, escape WeWork. Don't cherry pick. See all the good ones and the one that's kind of blew up. Luckily, we went in early, so we didn't lose our shirt. But along the way, in the last 8 years, I learned a ton from those amazing founders. Through tears and happiness and success and failures. So until last year, when I was looking into investing into NFTs early in January, February, to all the way summer, I realized I and myself could be a founder, and I should have been, because that's my personal drive. And instead of investing into a very, very promising vertical, which we think, the sports NFT, I end up setting up my own. And so since October last year to now, almost 6 months, we have successfully reached out to 110 clubs in the world. 50 of them are in active discussion with us, and 16 have signed. Love to tell you guys more if interested. But thank you so much for the mic.
So lovely. We'll come back to that. So I want you all to notice that there are 3 themes here, and you'll see this consistent among the 3 of us. One, there's deep experience that probably started in tech, because crypto has something to do with being able to understand tech and software and the way tech evolves. Number 2, there's a theme of being involved in venture and understanding how to which ventures will survive and which will not, and how to take on that kind of early stage risk, but specifically the venture side of it. And then number three, you need a background that has something to do with investment and understanding portfolio risk and the nature of risk versus return, specifically with the financial hat involved. This is one of the issues about investing in crypto. Is it's not really one of those three, but it's all of those three required in order to play and understand the risks involved. So you'll see. With that, let me turn it over to our next panelist, and you'll listen for those themes.
All right, great. My name is Jake Ryan. My background is exactly the same and completely different. I, for the first 20 years of my career, was an operator, and then I've always wanted to be an allocator. And so in 2017, I started to think about starting a crypto hedge fund and did so. And we really started in 18 and then started taking outside money in 2019. But a little bit more about my background. I'm a computer science major in the mid 90s here at the University of Texas. Computer science with a concentration in artificial intelligence. I'm a first author on some research work in the field of applying artificial neural networks to cybersecurity. Built one of the first artificial neural networks for fraud detection, and that work now has over 750 Google Scholar citations. And so I started out as a nerd running software development, being a software engineer. I ultimately ran my own consulting firm for almost 20 years. And I am, instead of East Coast finance, I'm West Coast tech. So I went to Los Angeles, Santa Monica. My firm went for a long time. We did custom application development. I built custom applications for people like Fox Sports, Lexus, American Express, Houlihan Lokey, many clients like that. In 2014, I decided to do angel investing. I got connected with two venture capital accelerator firms out in the LA area. And I was a mentor, and I had done roughly 17 personal angel investments in 14, 15, and 16. So 17 investments. I'm an advisor to 3 venture-backed AI startups. Of those 17, 3 are dead. 1 has an exit. 2 are, one's a decacorn, one's a unicorn, and the rest are somewhere in between. I decided to invest in in blockchain companies in 2015. I invested in 3 blockchain startups. I invested in Bitcoin in 2016. My first 3 Bitcoin were $645. I started talking with a friend about hedge funds, and I always wanted to be a hedge fund manager, but my track was to be a venture partner until I started to talk to this guy. We started to go out for dinners. I thought I could do it. I ended up getting a book deal with Wiley and wrote the book literally on crypto asset investing. The book is called Crypto Asset Investing in the Age of Autonomy. With that book, with the ability to think I could raise some money, and with my passion for investing, I had invested in stocks at 15, mutual funds at 18. I had options trading at 22. And so I had a big passion for liquid investment. And so I went out, established a fund, TRADECRAFT Capital, and you'll hear more about it. That's my background.
Okay, so we'll swing back around to the classes and types of investments you can do in crypto and their relative maturity and return and characteristics. So I'm David Nair. I have about a 40-year career. The first 25 or so were in tech. I have about 800 inventions in 9 domains, and this includes a lot of the computing and analysis stack, but it includes things like nanomaterials and optics and medical applications as well. I also have an MBA and education in mathematics and economics. I've been a part of 42 startups, either as a principal or founder. So I can tell you, in the venture side, I've been in the founder space primarily, but I've also been an advisor or a participant in 18 funds that have done investment in early stage innovation. Venture is one of the channels for doing that. I would say the most successful startup I was part of was SPSS, where I was an author of some of the tools that became what's now referred to as big data, or one of the wings of AI, analytical forecasting and prediction, and the tools for modeling heteroscedastic or sparse data into something meaningful. That eventually sold to IBM for $1.2 billion quite a while ago, and is the basis of IBM Watson Big Data. I also ran business development for Dell, which is what brought me here to Austin. Although I'm remote, I'm about 2 miles north of the group talking downtown. In the crypto world, my main participation has been on the design of token economies and token economics, particularly multi-token spaces and auctions and rules, and the microeconomics of automation of those economies. So the nerdiest side of the inside of crypto dynamics, specifically what's in the software and what's in the humans, trying to manage the software and predict how value grows or is exchanged. Let me swing back to Jake, because one of the things you briefly said before the conversation. So first I want to open with what does investing in crypto really mean? Because there are 5 or 6 different flavors and styles of investment. Why don't you talk through what you said before, Jake, about themes? You know, what investment themes are available? And I promise we'll come back to the 2 specific things that you guys are which I would say are 2 of about 8 themes.
Great. So I'm going to give 3 different topics as an allocator, as an asset manager, and then as a crypto fund manager, or you could be a hedge fund or private equity, either way, or venture. So as an allocator, as an investor in crypto, there are many different types of crypto asset classes. So just like there are stocks, real estate, bonds, in commodities in the traditional space, there are different types of tokens inside the crypto space. One type of token would be a stable coin. It would be like a treasury or like a currency. It provides these 3 properties of currency, which is a store of value, a medium of exchange, and a unit of account. It also delivers an interest rate. Another type of crypto asset class would be a platform. This is something where everybody else can build something on top of it. A platform is a public, accessible, immutable blockchain. It could be something like Ethereum. One other type of crypto asset class is a cryptocurrency. This would be something like Bitcoin. It's a store of value. You can move money around it. You can store it. It will store value. You can buy things with it. You can use it as collateral. Another type of crypto asset is a governance token, and I'll go on and on and on. Point 2 is that there are different ways to have investment themes inside crypto. What is an investment theme? Well, one of them might be sound money. It could be that the Federal Reserve and fiat currency are destroying the value of the US dollar. If that's so, you may want to have a way to store value that is outside the US dollar and outside the treasury system. If so, Bitcoin might be a solution for you. Gold might be a solution for you. Another investment theme might be something like decentralized finance. Decentralized finance is doing traditional finance, but in a peer-to-peer format. What does that mean? It means that instead of having a traditional trusted third counterparty, you're able to do peer-to-peer financial services. What are financial services? Things like lending, exchanging, derivatives, insurance, all the things that you do in financial services. Another investment theme might be...
And the name for that is DeFi, if you...
DeFi. Mm-hmm.
Yeah.
2 more investment themes might be something like autonomous platforms and autonomous computing. What does that mean? Well, if you can have a company that can start to do autonomous operations, they're going to be more competitive. Okay, competition drives technological adoption. So as people start to figure out that people can build autonomous operations, they're going to do so. They're going to be more competitive. They're going to be faster, cheaper, and better. Why? Because knowledge is doubling at a very fast rate. That gives you an idea of investment theme types. The final thing would be something like, for you as an asset manager, there's different ways to play in crypto. You could do crypto private equity. You could do crypto venture capital. You could do crypto hedge fund. You could buy spot directly. You could buy derivatives directly. Depending on how you're generating alpha, either through portfolio construction, market timing, or asset selection, you may want to pick one or more of these things. So,
You want to talk a little, Maggie, about NFTs or
Of course.
so you know, thank you for the broad description. There are also things like Web3. I would classify crypto investment as you can give your money to somebody else to make placement in crypto. You can try to do that directly. There's a lot of mechanisms for that. You can make bets in things which are liquid. You can make bets in things that are not liquid.
two more investment themes.
Yeah, more investment themes.
Two
Talk a
more
little bit about
themes would be Web3 and NFT.
and NFTs, for example. Please start with just a broad description of NFTs and what the value is there, and maybe some of the variety of choices.
Of course, yeah. So NFT has a similarity with crypto in the sense that it's also a Web3 tech-based product, right? It sits on top of a blockchain, which represent the ownership of the digital collectibles. When I saw, okay, so I got in blockchain and crypto slightly later. I got in 2018. When I was first into crypto and blockchain in 2018, I was a little bit scared because I maybe went in too deep. Went to China multiple times because at the time China has about 70% of the hash power to generate Bitcoin. So I wanted to see some secret places where they had the world's largest Bitcoin mines. Very fascinating trips. But I also saw a lot of the negative side of the coins. Oftentimes there would be bad characters, who try to leverage the newness of technology and the people's naiveness, and then there will be scams associated with it, and etc. I remembered at the end of 2018, after taking 6 months of courses even to program blockchain on my own, I was slightly disheartened, and I went back to traditional technology investing. But all along, I followed crypto, and I also become advisors to blockchain companies. I love the blockchain itself. So one of the companies I've been advisor for a couple of years is called HODL Ventures. They build layer 1 blockchain like Ethereum, etc. And through them, I learned a lot. For example, on Ethereum, you can process about 15 transactions per second versus on AWS, guess what? 500,000 transactions per second, right? So there's still a ton of innovations to come into this space. It is absolutely fascinating. I love blockchain because I believe in democracy. This technology help us decentralize, make a tech place become democracy. But there's still so many things we can improve on top. And so I was kind of halfway on the fence with crypto, and then along came NFT at the beginning of last year, right? And what I saw a huge difference between NFT and crypto is the mass adoption of general public, right? So just let's talk about user experience, right? When I first entered crypto, wow, I have to open the MetaMask or a wallet. I have to connect to exchange, and there's hot wallet, cold wallet, and a movie in between. And then you have to understand, how to buy Ethereum and use Ethereum sometimes to buy another coins. It's very complicated user journey. I encourage everybody to try to open a MetaMask, right, today, and see how long it would take you to get there, right? When you look at NFTs, right, let's look at some of the pioneers in the sports industries, right? We don't view them as competitors, call them pioneers. If you look at NBA Top Shot, NFT Tops, right, there's MLB trading cards who are become blockchain now. You go in, you pull out your credit card, you type in your credit card information, bang, you got an NFT, right? You don't need to know anything about crypto, blockchain, wallet, nothing. You're buying it as if you're buying a t-shirt on Amazon, right? But yet, this is a technology, is a product sitting on a Web3 infrastructure, right? That's the beauty of it, right? everything else is transparent. You go in there, you can see NFT, who really owns it, the history of that product. Everything is absolutely transparent, right? And yet you don't need to know so much to make your user journey painful, right? So that's why when we look at it from the initial investment perspective in January last year, we're like, wow, this is the moment that the world will see the beauty of blockchain. And history speaks to itself, right? Since the last 1.5 years, we see so many Fortune 500 companies launch NFT, right? Nike launched it, Disney has planned to do it, right? Like Budweiser launched it. There's so many Fortune 500 companies are now launching NFTs, right? Have you heard any of them launch their own cryptocurrency? None, right? So to me, go ahead.
So number one, just turn your microphone a little bit towards your face.
Oh, I'm sorry.
Yeah, that's good. So just briefly, the advantage of a Fortune 500 company having an NFT, what is it doing for them? What's the value created by the NFT versus whatever else? Yeah.
Right.
Yeah.
So when a Fortune 500 company opens an NFT product, right? Number one is a digitalized product. Imagine a Coca-Cola, right? All we've seen or associated to that brand is a physical beverage, right? What if there's a digital Coke? What if you can use that NFT to redeem things, right? To play with it. There are a lot of gamification that's happening in NFT. There are even companies who use their NFT that you can play and earn new NFTs, right? There are many things that suddenly a traditional consumer-facing brand can do in the digital world, right? And that's not to mention the next step, they're all gonna go in metaverse, right? And you won't be able to go into the metaverse without solidly proved ownership of digital products inside that digital parallel universe, right? And blockchain NFT is the backbone of that new environment, that new economy, that new GDP that is coming our way. Either you like it or not, it is absolutely coming.
So I'm hearing it for branding assets, which are intangible assets, makes sense that there'd be a digital form. But, other examples like tickets, perishable rights. Just give me a couple more examples. What's an NFT doing for you?
Okay. Yeah. So the fundamental of an NFT is really the clarity on the ownership, right? Like anybody in the world can see the smart contract is an open piece of code, right? Open source. Today, like say, for example, our company, our product, you can go in and see in the smart contract, right? If we build in a 10% royalty, meaning every time this NFT is traded, the originator or the creator gets 10% of that sales proceeds, nobody can change that, right? It is hard-coded in the blockchain. Blockchain, one block is done, move on, one block is done. It is immutatable, right? So that's the beauty, number one, the ownership proof in the digital world, right? And also NFT, like I said, it's not really, there's this concept of DAO, right? Decentralized autonomous organization stuff. So NFT, sometimes you don't have to think it's, to the extreme, you don't have to think it belongs to a company. You could say an NFT product is the membership of a community, right? Like, so some use case you're asking, besides being, can sell NFT tickets, etc. The most successful NFT project in the world right now, right? The Broadwall.biz Yacht Club. What is it? What is this NFT, right? It is literally a digital art collectibles, right? But why just a 2D computer generated digital art can be traded at millions? What really NFT is, in my mind, is the membership card to a community. Yeah, I read early on a 25-year-old NFT collector once said, an NFT is worth zero without the community behind it. Yeah, like that Broadwall.biz. What is it? If you just look at it without anything else, it's just really, it's a 2D graphical card, right? But the community bought into the value. The community believed in it, right? And today it's worth millions and millions. The company right now is valued at $5 billion. Think about it. It's a company on an active basis, on daily active basis, only can have 10,000 users, right? Because the Broadwall.biz is limited to 10,000 apes. That's it. That's what makes them so expensive, right? A company with 10,000 daily active users can be worth $5 billion. So then I thought, how could that possibly be? Does that mean like VC funds go nuts, right? Or there's some justification to it. Then I Googled how much Louis Vuitton, the brand, is worth today. 14.6 billion. What is a Louis Vuitton bag, everybody? I don't have it, right? I mean, I could buy it. Then maybe I will become part of that elite member one day when I, show off that on the street. But the utility function is the same as $100 Coach bag. It has no difference, right? Why you spend 50,000 to buy that bag, or a Hermes bag can be up to hundreds of thousands, right? Why? It's that membership. I have this bag. I am successful, right? I belong to that elite community that who can afford to buy this. And that's what I see NFT's true value is.
I think another way to say it is that intangible asset valuation on the stock market today is about 90%, right? So outside of what people make, about 90% of the value actually intangible assets, such as brand, which Hermes has, right? So
Exactly, yeah.
And intellectual property and other things that are intangible all travel very nicely with NFTs, including limited and specific access to information and shareable rights for information, tracing of information. So if you think of the entire intangible world being tradable and digital, is another way of thinking of NFTs.
Beautiful.
So
we have a little bit less than 10 minutes, guys.
So let's talk a little bit. Let's go back, Jake. You describe the way you're managing investment in what you run as one of the examples of digital assets.
Yeah, in the ideal world, I could run a few slides in 5 minutes.
Okay, let me see. I can pull up your.
If not, that's okay.
Just want to make sure I have. It's the TRADECRAFT.
So we run a hedge fund. It's a liquid instrument. So we do venture style returns inside of a liquid hedge fund. We have monthly redemptions. So we have, we take 79%, last year in 2021, we took 79% of the risk of Bitcoin and generated 122% of the performance of Bitcoin. We have a Sortino ratio of 2.1. We do that through proprietary software. We also have a thesis on how and why crypto assets will make a huge difference in the future.
I'll do it. Okay. Slide down.
Go.
Maybe get them,
2 or 3 slides max, because 5 minutes. I want to come back to Maggie.
Keep going. I know. I will do it in 4 minutes. Yeah, we're not going to be able to. We're not going to be able to do it. It's okay.
Got the slides, great.
The big thesis is that we have a new long wave economic cycle. Long wave economic cycles drive the economy and drive the capital system. We've had 5 in the past 200 years, from the Industrial Revolution to electrification to railroads to oil to the age of information and the internet, and I assert we have a new one. Those long wave economic cycles are about 50 to 60 years. What's so interesting about that is it happens to be a cluster of innovations like AI, IoT, robotics, and crypto have come together to allow us to do things autonomously, both in the digital space and in the physical space. And so with that, autonomous operations allow for real and ultimate competitive advantage, especially because knowledge doubles. There is a knowledge doubling curve. Knowledge used to double every 400 years in 1900. In 1940, knowledge started doubling every 40 years. In 1980, knowledge started to double every 17 years. In 2020, knowledge started to double every 2 or 10 years. IBM took this idea, who came from Buckminster Fuller, and looked and said, wow, that's right. In 2020, knowledge is doubling every 13 hours. And so how is a human being going to keep up with that? Robotics allow for autonomous operation in the field in the 3D space. IoT and sensors generate a massive amount of data. AI can take that data and turn it into knowledge. And now crypto and blockchain can turn that knowledge into economic activity. And so this is why crypto is going to be at the center of the next long wave cycle.
All right,
and we invest in that.
So your thesis is you're selecting out of liquid, available, tradable crypto assets that match this automation theme and bringing together of these forces. And you're reading that as reducing risk, increasing return. And you've demonstrated that over 3 years, and you can invite people to talk to you specifically which picks and how and what your logic is behind it.
Yes, we have 4 investment themes. We use portfolio construction, market timing, and asset selection for risk management. And we have proprietary software that derives that management over time every day.
All right. Switch over to Maggie. So you're specifically in the sports world, NFT meets sports, meets team offerings in branding. Talk about that.
Thank you. Yeah, absolutely. So back to what NFT was, it's the ownership proof, it's a membership status. It's exactly what David was saying. It's a tradable IP, right? Up to now, only huge corporations have that ability, right? Like you can have sponsorship on macro assets, right? Stadiums, stands, shirts. What about the average Joes? What about us? So blockchain and NFT allow us to participate in that. And, again, when I was talking about community, I cannot stress more important how important the NFT is to a community. In the whole world, at least to my analysis, the strongest communities exist is either sports, churchgoers, school, parents, right? Like multiple discount things. And among all of that, I thought sports is the most commercialized community out there. It's a multi-trillion-dollar industry, right? And just NFT and a few projects, if you guys have not heard, like So Rare or NBA Top Shots, NFT Tops, please check them out. They are they're explosive. Okay, the companies are worse than, I think it's maybe some of them are 1 to 2 years old. They're worth from $500 million to 4.3 billion to 7.6 billion. I'm talking about a company that's literally less than 2 years old, right? And this is with only a revenue multiple of 10 to 30. What does that mean? They're generating huge revenues, right? Why is that? Because the sports community loves to use NFTs to demonstrate their belongings, their to show their support, allegiance to the clubs. And these NFT providers, as long as they come up with really great product designs, they sell, their revenues are in the hundreds of millions, right? Less than a year old. So that's, what as a company we're trying to strive for, but what our product offering to the global sports organizations is in a similar vein, that we want to help them deeper their fan engagement, right? Bring them to the Web3 metaverse journey with us from a very simple NFT product offering. And we allow them to have annual recurring revenue, right? Because every NFT that's traded, they get 10% royalty back, right? That's ongoing sustainable revenue for the community.
So a product design that fits the particular community that you're in and the participants in it. Yeah.
Absolutely. Yeah. And lastly, I want to say about back to that corporate world, right? Corporates are constantly looking for a new way to do advertisements, do marketing, reach out to a target audience. And our design and our collaboration, our co-jointly owned IP with all the sports organizations allow the corporate to access this amazing fan base from a very quantifiable way, right? Like you drop an NFT into the community, into the wallet, the hands of the sports fans. No matter if you like, say, a brand or not, but a free NFT, everybody loves it. Because if you don't want it, trade it out. It's worth something. So that's where we are, in collaboration with the sports industry.
Marty, any questions?
2 more minutes, Dave. Yeah, I have a question. So, the sports NFT world seems to be very crowded these days. I mean, there's a lot of people moving into it. Are you guys developers of the, the metaverse aspect of it, or are you, actually creating the NFTs from it?
Yes.
Or what part do you do?
Sure. Yeah. So we design, create, and manufacture, basically mass produce of our own NFTs for the clubs. The idea is entirely ours, and our IP is very, very away from the crowded space. When you mentioned every other person jumping into sports NFTs, what are they launching? Almost 99%, right? What we see in the market is they're seeking the IP rights of the images of the sports stars, right? Because that's the easiest sell. Right? If you like all these trading cards, So Rare, those fantasy games, everybody is creating an NFT based on the likeness of a sports star.
But don't get me wrong.
Yeah.
Even though there's many people entering the market, The market's huge.
It's huge. It's trillion dollars. Yeah. And we, if anybody interested, reach out to me afterwards, but we stay the one from the IP. We have a very unique IP offering. And so far we've been doing great, right? I mean, that's what I'm saying. 16 clubs signed up, and we are aiming at signing 100 clubs within the next 12 months.
Right, and then for Jake, so you guys are doing a lot of trading and you're hedging. Right now, is it mostly the largest, coins that are out there, like a Bitcoin and Ethereum, or are you trading smaller coins?
Yeah,
Or?
so for the most part, our duration is to hold something about 3 years. We're looking to buy something between 20 million and 2 billion. We're looking to raise that from 10 to 100x, generally speaking. I am in spot markets. I am in derivatives markets. I would be in NFTs at Meta as well. Meta is one of 4 of our investments.
Do you do anything with on-chain analysis?
Yes.
Can you describe that just a little bit for the audience? Because I mean, actually, I think it's something that's between you and the.
Point the mic at your mouth.
So just like stock traders have technical analysis and RSI and many metrics like that for technical analysis of stocks, there's also fundamental analysis that you can do. Since a blockchain is a public blockchain, you can query it and get information. You can figure out how many wallets were used in a day, how much money went through that blockchain in a day. Since a blockchain is a network, it has network effects. Since it has network effects, it follows a certain law, Metcalfe's law. Because it can do that, because you can look at fundamental analysis of how many people are a part of that blockchain at any specific period of time and get a bunch of metrics, you can get a lot of fundamental data. With that fundamental data, you can make a value determination. So with the price of a crypto asset, you get the price. And with the fundamental, you can figure out value. You can figure out price and value and what's
all the on-chain analysis also help you reveal like what the big whales are doing or the holders of
yes, you can see
assets, and you can age
all kinds of activity because the blockchain is immutable, meaning a record is entered. You can only enter a record. You cannot edit or change a record because that's what. So you're able to do tons of analysis to see who did what, when, where.
In the blockchain, are there many instances of somebody who's a whale transferring assets between themselves? Like,
yes, sometimes, yes.
Is that a frequency? I mean, like, obviously you see people like Goldman Sachs and Morgan Stanley operating with dark pools.
Yes.
To hide the mask who's doing the trading. Has that happened in the crypto world as well?
All the time.
It's particularly intensive, Marty, at the beginning cycles of new ICOs or new entries into markets or changes in markets. When you've seen a big price change, there's usually some activity, and you can look at blocks of trades and identify it.